Hello and welcome. My name is Benoit Poliquin, and I'm the founder and one of the portfolio managers here at Exponent Investment Management, where we help private individuals find their and manage their state of financial independence. So today we're going to do a back to basics video on how to profit from investing. In these past 2 months of turbulent times, I think it's important to go back to why we're doing all of this. And the first conversation or thought is the difference between investing and speculating. We really should contrast that. Um, we're also going to talk about investing for income, and finally, investing for growth. Some investors look for one or for the other. Ideally, you want both, but really, you have to think about the mandate for your investments. So let's talk about investing versus speculating. Some really great thinkers in the investment realm, Phil Carre, Graham and Dodd, and Keynes, really covered that subject in their respective books. There's a great blog here that I would invite for you to go and look at, and it really is a pretty good synopsis of what these great thinkers, how they define the difference or how they contrasted investing and speculating. For me, it's really the difference in time, your time expectation. If you're speculating, which is, let's just say you were exposed and your brother-in-law told you to buy Acme Mining, you're really you're laying a bet down. You're really trying to profit in the short term. When you're an investor, time is really working for you, and you probably don't even have a set exit date. You also want to think about the profit drivers. Why are you speculating? Are you trying to, follow the herd or be in there with your brother-in-law, or are you really trying to capture the economic growth of a country, or the long-term prospects of an industry, or even of a business, or maybe you've invested in land or a triplex? Those are not speculating per se. These are really investment decisions. And finally, when you're investing, there is a certain expectation that your capital, while momentarily impaired, will come back to you at some point. When you're speculating on Acme Mining, you really don't have an expectation that the capital will come back to you. So let's talk about investing for income. So I've got 3 visuals here for you. Obviously, a commercial real estate or office buildings. We have a triplex, or the tried and true bond investing, where you would clip that little coupon and take it to the bank. One of the main drivers when one invests for income is really the income stability. You want to depend on that income. It might be covering your fixed expenses, or it's something that you really need to depend on for the length or the term of your investment. You don't really have a big expectation for investment growth or income growth, and however, the safety of principle, you are not expecting a wide variation in the quoted value, if you will, of your investment. So that's called safety of principle. The growth investor, on the other hand, and I for the visual, I just sort of grabbed the memorable scene from Forrest Gump, where he gets a letter for thanking him for his investment in Apple Computer at the very bottom or at the very start. And obviously, we all know the story around what Apple is today. So the idea is you're really investing for price appreciation. Obviously, Apple pays a dividend today, but for many growth investors, there's little to no income appreciation or expectation, I should say. You will, however, as a growth investor, accept price fluctuation in the short term in exchange for long-term appreciation. That is part of the deal. So that obviously we can see the squiggly lines on the upper left quadrant here of the Apple chart since its IPO, and it was very volatile on the way up, and it still is somewhat volatile today. So it's important to remember that when you're investing for growth, there is this quid pro quo. You do accept price fluctuation in exchange for long-term appreciation. Same goes with land. Land prices are very volatile as opposed to an income property. And that's part and parcel of growth investing. So when you put it all together, what are you trying to do? What are we trying to do here at Exponent? You're trying to put together a bit of both. You're trying to invest for income. You want stable, reliable income. And that income is a function of profits. So you're looking for profitable companies that have a demonstrated ability to manage quality operations and execute on their business plans. You're also looking for appreciation. You're looking for appreciation in the value of the asset and also on the income. You're looking for dividend growth, at least some appreciation or growth in the income. On the growth of the value of the asset, that is still dependent on investment climate, whether investors are appreciative of the investment, the sector that you have laid your investment or put your money in. Whether or not the investment climate is positive for investors or negative, if there's a larger event at play. So especially if you compress time, the current investment climate will have a great impact on the value of your investment. But overall, over a long period of time, you are investing for the appreciation. So as you stretch out time, the ups and the downs tend to, you expect them to dissipate. And finally, volatility. There will be some volatility to any investments, whether it's real estate, stocks, even bonds. And so you're really trying to mitigate that as much as you can, but you have to accept it. You have to live with it. So unforeseen events bring on volatility, both at the company level, geopolitically, obviously in the pandemic that we're living through right now. Those have a large impact on the quoted market values of all tradable assets. It's sort of the yin and the yang. So you want the income, you want the appreciation, but the quid pro quo is to live through the volatility. If you have any questions or comments about any sort of videos you would like us to cover, by all means, shoot us an email and we will do our best to cover the questions. Thank you so much for watching.